Good morning. Welcome to the first half results presentation of the Viscofan Group. An exceptional presentation given the circumstances provoked by COVID. And I thank you for your presence and caution to follow at all times the security protocols with which we are trying to recover some of the meeting routines that I have with you. So I'm very happy to see you here to discuss the evolution of the Viscofan Group. First of all, it could not be otherwise. I want to stress again that the management of the company has been completely focused on three fronts. Firstly, to ensure at all times the safety and well-being of our workers and their families. So very early on the year, we implemented protection protocols with the help of our experience in China, including sanitation measures, safety distance, mandatory use of face masks, disinfection and cleaning work, as well as facilitating remote working and increasing communication between us all to help the necessary cohesion of a multinational group like ours, sharing the knowledge to remain competitive. Secondly, I would like to highlight the tremendous commitment of the Viscofan team that has more than fulfilled its responsibility to the market. Even in times of greater uncertainty, we have kept our production centers working and guaranteeing supply to all of our customers around the world. In these exceptional moments, our customers have found in us a reliable partner with a wide range of products and sufficient flexibility to meet the changes in consumption habits that have been given. In this sense, in a context of clear market growth in global terms, we have observed a strong growth in demand for volume of products, such as cellulose casings, specially designed for cooked sausages and the like, which are often very domestic consumer applications, for example, in the markets of Europe and the Americas. While in some markets where consumption is more prevalent abroad, such as in the Southeast Asia, or some snacking products and value-added applications in North America, where consumption has probably been reduced. Having had a wide portfolio and a team prepared to adapt to changes from the same process of orders and requests as in the production planning has been a great challenge that demonstrates the strength of our business model. In addition, the veggie casings we launched last year continue to show rapid adoption in more and more countries. Finally, to the best of our ability, we have also fought to limit the spread of COVID-19 and its effects by helping people who are fighting on the front lines and especially vulnerable groups in this situation. In addition, we are conducting awareness-raising campaigns for our 1,000 workers to ensure that hygienic and safety measures are also carried out on arrival at home. It is a period of extreme demand for all of us, and the results are a great professional satisfaction, although not complete. Unfortunately, on July 7th, we had a fire in the office area of our facilities in Serbia, in which two of our colleagues and workers died. From here, I want to have a very special memory for them and their families once again. As I said earlier, the results of the first half of the year have been characterized by strong demand, not only in the first quarter, where a good tone of volumes was already observed around the world, but has even accelerated in the second quarter, where we can say that the impact of the COVID has been more global. Thus, growth in Viscofan has been driven from the front line of revenue, 9% in cumulative terms and 8% in the second quarter. This growth has coincided with a period in which I will dare say that Viscofan is more optimized from the point of view of production and industrial park, a level that has driven double-digit growth in the main financial figures, despite an adverse foreign exchange context and also some operating costs, especially the collagen hides. The tax rate, which has not prevented the half-year net profit from exceeding 57 million euros, or more than 25% higher than the previous year, or 30 million euros in the second quarter, growth of 31% compared to 2019. I would like to emphasize that in these results, we are integrating the companies acquired to Nita Gelatin, which have contributed to 14 million euros in revenue and with just half a million euros in EBITDA. Slight erosion to the net profit. While these results are still far from their true potential, the team of Viscofan Collagen in North America is showing great enthusiasm for this project, facilitating the integration in Viscofan in a complicated context. Revenues of the year have grown by 9% compared to the previous year, up to 447 million euros. Out of this growth, 8 points correspond to the sales of casings, where we have had volume growth in all families, accompanied by a global improvement in the price mix. In contrast to this behavior, there are cogeneration revenues, which are slightly down in the semester, especially in the second quarter, where there's a lower remuneration for cogeneration in Spain at 1.5 million euros. In addition, the currency situation has eroded the group's growth by about 2 points, mainly due to the depreciation of the Brazilian real. Not only we have grown in all technologies, but also we have done it in all reporting areas. In Europe and Asia, revenues exceed 240 million euros. This is 5% higher than the previous years in both reported and like-for-like terms. Excluding the cogeneration revenues reported in this area, which as we have seen have been reduced this year, the rate of growth in Europe and Asia exceeds 6%. North America revenues grow by 18% compared to 2019, 6.3% excluding the new acquired companies of NITA, and 4.4% like-for-like. Once again, the launch of new value-added products, the advance of the fibers and collagen have been accompanied by the recovery of the cellulose market, allowing Viscofan to regain its position in this area. In Latin America, revenues grow by 6% in reported terms and 23% in like-for-like, up to over 66 million euros. This growth is driven both for the higher volumes and for a commercial strategy aimed at resisting the weakness of currencies in this region. Thus, as you can see from the next screen, quarterly revenues keeps growing, even at a faster pace in comparable terms, where the revenues from casings contribute more than 9 points to revenue growth, more than enough to resist the 3 points of growth that weaken currencies and the additional point of growth that this quarter subtracts cogeneration. An evolution that corresponds to a new record high in quarterly revenue, which about 225 million euros, driven directly from sales in casings, with an increase of 9.5% compared to the previous year, reaching 215.7 million euros, a new quarterly all-time record. The counterpoint this quarter is situated in the decrease of 20% in the revenues of cogeneration, 9.2 million euros, due to a lower remuneration to the energy sale in Spain, where electricity prices remained particularly low during the lockdown. The strength of revenue has occurred in a context of great optimization of the industrial park of Viscofan. Costs of consumption grow by 1.5% compared to the previous year. The high productive activity, efficiencies we have achieved in production, and savings from the new technology in cellulose and fibers in plant number 4 in Caseta, and a higher capacity to respond to the increases in demand that we are having is allowing us to reach gross margin improvements, even in a cost-adverse scenario for some raw materials, where we have seen double-digit increases in the price of the collagen hides. On the other hand, the striking increase of 12% in personnel costs is associated with the incorporation of the NITA Casings company, or workforce, in North America. Excluding the personnel costs associated with these companies, the amount increases by 4.7% compared to 2019, with an average workforce increase of 1.2%. This amount includes over €500,000 in personal special contribution of €1,000 per employee in the facilities of Caseda and Ortiain in Spain in recognition for their work in this tough period. The other operating costs grow around 5%. Under this heading, we have on the one hand the highest costs of protection material, cleaning, freight, and transport that have been offset with lower costs of energy supplies and less trips due to the mobility restriction during confinement. With all this, EBITDA grows by 18.7% and 19.7% in like-for-like terms. On the other hand, lower needs for investments in this second phase of the more to be strategical plan is moderating depreciation and amortization, growing 3% compared to the previous years, placing EBIT growth in 28%. In the analysis of the behavior of EBITDA by components after excluding the non-recurring costs of the strike in the United States last summer, you can see the fortress of underlying growth, 19.7% compared to the previous years. In turn, new acquisitions continue to have a very low profitability, contributing just €500,000. Meanwhile, the exchange rate against the Brazilian real mainly means a loss of €3.7 million in EBITDA, equivalent to 3.8 points of growth. Eventually, a very positive progress that is observed in the evolution of quarterly EBITDA margin that grows 2.5 percentage points in reported terms and 4.1 points in the like-for-like basis. This has allowed us to reach one of the best margins in recent years. Although the need for investments is sensitively lower than in the first phase of the strategical plan, Viscofan's ambition to transform remains intact. In this sense, I would like to stress the many initiatives that we are developing within our Sustainability Action Plan, where an annual investment close to €14 million is included in our plans, highlighting innovative initiatives to reduce our carbon footprint and to combat the climate change. Thus, in September, we will have installed in Caseda the first cogeneration engines with hydrogen capacity, with the idea that we can supply part of our energy needs with the green hydrogen. For this, we are exploring different collaborative initiatives with the main market players. As you know, our machinery is characterized by being proprietary technology, and in many cases, this means that with the knowledge for an adequate installation and startup requires our technicians and experts who move around the world depending on the different projects. Well then, mobility restrictions and our coronavirus protection protocol are to assume that some of these projects are likely to be delayed in time. This does not involve a material change because, as I said before, these are projects of continuous improvement over some assets that are significantly optimized and therefore do not pose a risk to our growth plans and results for the year. Our ambition is to continue to carry out the projects that correspond to the €54 million landmark. If this is not possible, they will be delayed until 2021. Under that scenario, we have sufficient capacity to undertake investments planned for 2021 and those pending from 2020, as we have proved in the past if circumstances adequate. The strength of our business model translates into a solid cash flow generation. Over these months, we have managed to maintain the net bank debt within an almost stable level at the end of the year. As you can see on the screen, in these first months, we have also prioritized working capital investment with the aim of having sufficient flexibility in the face of possible uncertainties that may arise in an environment where it should not be forgotten that the coronavirus is still active and that it may at any time affect our operations, to our supplies, or to our customers. Furthermore, we have paid in June the final dividend of €0.96 per share, a growing dividend that also serves as a capital protection for our shareholders. With all of it, the net bank debt as of June reaches 43.8 million euros. This is 40% less than the previous year. A strength of balance that's also good guarantee in this current environment. In short, a very demanding year in which I want to re-emphasize the excellent work of a formidable human team, drivers of the progress of Viscofan Group, and the results that have grown significantly in the main financial magnitudes. With a solid business model and at the same time flexible to adapt to environments that are changing as the current one and in which we must continue with great caution because we have to manage very closely to the day-to-day and in which we want to remain cautious although optimistic since the result of the first half of 2020 results reinforce our growth prospects for the year as a whole. Thank you very much for your attention.